Can you guys hear me now? Hopefully we get started. Hi guys, can you hear me? Hi Jean-Luc. Hello? Hello? Guys, we've had some technical difficulties. Jeez, I do this all the time, and 2 days in a row I've had some technical hassles. So hopefully you guys can hear me loud and clear now. Let's get started. My name is Sean van den Berg. I head up client education at PhD Online. Thanks for this opportunity to present this webinar to you guys. I know you guys are involved in a bit of an investment club, and thanks to Jean-Luc for setting this all up for me. Let's go quickly through the agenda. My idea today is just to go through the share selection process, and I've been asked to also just to touch a bit more on the technical analysis and that, on the fundamental analysis. So we'll go through that quickly, but just to get started, give an introduction to PhD Online, who you're actually dealing with. We've been named the Business Day Investors Monthly Stockbroker for 2 years in a row, and we are currently busy with the 3rd year, and the guys are voting at the moment. But obviously, most of you guys know that Jan Maton went to your university and things like that. So you know PSG, we listen on the JSC. But PSG Online, we're the online stockbrokers. We got the awards for our research, our trading platform, but also the products that we offer. So we've got roughly about 10 products, from savings right through to unit trusts and exchange trade products. And being a JSC member, obviously we're involved with equity trading, but also with derivatives such as single stock futures, currency futures, and contracts for difference. But also through our platform, you can trade offshore 25 different international markets. So we're basically a one-stop shop. So that's just quickly an introduction of who you're dealing with. We've been around for about 13, 14 years now. Anyway, to make money on the market, I always think of a three-legged bar stool. You need knowledge and experience, information, and analysis tools. So to get started, I know some of you guys have been involved for a while, but just to give you a quick overview, you need knowledge and experience. You need the theory, what's a share market, why do we have the share, and there's a course available on our website for free, everything you need to know about the market. When it comes to experience, we talk about gaining practical experience in a risk-free environment. That's where we talk about simulator. I'll be touching on it today. When it comes to analysis tools, we talk about technical analysis and that kind of stuff. But also more specifically the information, that's the research tools available on the website. But like in the stock, like sitting on a three-legged bar stool, you break one of those legs off, what's going to happen? You're going to fall over. So your chances of success are greatly improved if you combine all three elements together. Okay. So this is what we want to discuss today. To get started, there's basically 4 steps. I've tried to simplify it for you guys. So let's concentrate on step number 1, narrow down the choice. Now I've just tried to create a simple little, call it a little drawing for you guys to understand the process. And by the way, this presentation is being recorded, and also is that I'll be sending the presentation to you, Jean-Luc, so you can share it with you guys, so you can do revision and any questions you might have. I hope you guys are hearing me loud and clear. Yeah, so hopefully that's fine. Gee whiskers, I'm getting all these little questions all the time. So you guys, let me just quickly answer 1 or 2 little things coming through here quickly. Look, you guys okay? What questions you guys have? We can hear you. The slide is not working. Ah, gee whiskers. You can hear me now, but the slide presentation not working. Ah. Okay, I hope you guys can see that and hear that now. Wow. Okay. So yeah, the idea is that this presentation is being recorded. It will be sent to you guys. So hopefully all the technical glitches will be over the past now. But anyway, the process is to look at the whole market and from there chunk down. So we simplify the process for you. Instead of looking at the whole market, looking at 100 shares, and from there we're chunking down. Through the process of prospecting, you're going to make a watch list, and from the watch list, with analysis tools in that, you're going to choose some shares for your simulation or for portfolio. But obviously there will be times when shares in your portfolio will be a sell signal or become a dog. They'll move back into your watch list. You don't just forget about them. There will also be times when your shares in your watch list might be suspended or you're not interested in them anymore. You drop them off. But it's a process of if I had to look at it this way, something going out, something coming in again. So this process, and that's what I want to focus on today. I want to highlight for you, it's important to have a process, a documented process. How do you actually choose your shares so you can fine-tune your decision-making process? So that's my idea today. Okay. So, guys, let's get going. Hopefully the technical glitches are over now. And let's go forward. Okay. So, step one, you need to narrow down the choice. If you open a newspaper, you'll feel overwhelmed with all the information. So you need to narrow down the choice and focus on the potential winners. So step number one, we simplify the process for you by, instead of looking at 400 stocks, you're looking at the top 100 companies. This is the top 40, the large caps, and the mid caps is the next 60 companies. So how you do it, how you narrow down the choice, we go through the process of prospecting. We talk about stealing ideas from the mining industry. When they span for gold, they're prospecting for gold. You have to go through a lot of gravel to find the gold nuggets. The same thing here. So there's two approaches on the highlight. First of all, top-down approach and using financial journalism. Our goal is to create a initial watch list. So you're not doing any analysis, just going through the process or going through the gravel. Okay, so on our website, so I'll be explaining this process to you also just now. You need to register on our website for a free trial. Later, some of you might want to open up trading accounts and things like that. But open up a free trial, register username and password. You log in. Okay, on our website, you'll find along the top there's a little button called Indices. And that's from that Indices button, you can click on a little button there called Futures and Options. But you'll get a list of all the shares on our simulator list. What's important is print this list out. So you'll get the share codes and the share names, but also the different sectors. So you can start familiarizing yourself and orientating yourself into the market. Some of the shares you might have heard of. You know, some of you have heard of African Bank and Afrox and Anglo Platinum and things like that. Obviously, the banks are familiar, the ABSAs and the FNBs and that kind of stuff. But the idea is that from this list, you're going to be choosing shares now for to watch and things like that. So let's explain the process a bit deeper by going through the process of prospecting. I use this a lot. I use this what I call a top-down approach, or going from a general to the specific. Imagine a funnel, lots of information going in here. You're going to have some filters in place that only a little bit of information comes out the bottom. This takes you about 20 minutes every day. Good way to keep your finger on the pulse, what's happening in the markets and things like that. And this is where, yes, ideally, technical analysis and charts will help you a lot. So the idea is going from the general to the specific, look at the big picture, what's happening on the international markets, what's happening in the States, on the Dow Jones, the S&P 500. These are just markets, and what's important when you look at the graphs, you can go to Bloomberg's website, for example, and look at the graphs of the last year, last 5 years. What is the trend? That's what we want to try and establish at this point in time. Is the market going up? Is the market going down? Is the market moving sideways? So international markets, we go from the States, we go to China, to Hong Kong, then to Japan, then over to Europe, and just have a view. Start formulating an opinion for yourself. Where do you think the market's going? Is the market going up? Or is the market going down? Remember, we're trying to establish the trend. What happens on the international markets affects our markets. What moves markets is sentiment, how people feel about the economy, about future prospects and things like that. Secondly, within all those different economies, with all those different markets, we look at the economic indicators. We look at the level of inflation, we look at the level of interest rates, and what's the trend also? Is the trend going up or going down, whatever the case might be. I'm going through this very fast, just to give you a quick overview. Remember, there's a lot of information on our website, and this whole process is also explained in a whole lot of videos. Have a view on exchange rate. What's happening to the dollar relative to the euro, relative to the Japanese yen? What's happening to the rand relative to the dollar and things like that? Is it getting stronger or weaker? What are the factors impacting on the rand? Okay, remember our economy is very much export orientated. We need to have a weaker rand. We want to be competitive with everybody else. So it's important to have a view on that. What's happening with the gold price? What's happening with the platinum price? Is it getting stronger or weaker? Remember, our mines, we're still very much mining orientated. We export our gold and our platinum, and our mines are still a very big employer here in South Africa. So it's a big sentiment driver. But to get down to how does all this affect our local market? And this is, I'm just going to simplify it for you just now in the next slides to show you how it all fits together. So we say local market is the JSE All Share. Okay, and from there we break it down by industry, financials, industrials, and mining and resources. So within those different industries, we look at specific sectors, be it mining, gold, platinum, financials, be it the banks, insurance, listed property. Within those different sectors, we've chunked right down to what we call the shares now. We start looking within the banking sector. We look at ABSA, what's happening with First Rand, what's happening with Standard Bank and those kind of things. Then we get down to a stage where we have a checklist. Basically, you've got certain criteria. Does the share meet my criteria? This is part of the gravel process. So I just want to show you quickly. This is just a screenshot of the JSE All Share. This is all the shares on the market. So this is what's been happening since 1998. This is also the end of the Asian crisis. This is what we call a weekly chart. So you can show you the long-term trend. But you can see it's making higher highs, higher lows. Quick technical analysis lesson here. So you can see that low is higher than that one, higher than that one. This is what we call a bull market. So the trend is bullish. Okay, if the trend was going down, it would be the opposite. We call that bearish. We've also got two moving averages on here. The red line is the 50-week moving average, and the green one is a 200-week moving average. What's important is when they cross. So that there is a crossover is what we call the golden cross. Anything above that is good news. So the trend is bullish. There we touched, but we didn't really cross over, but the trend is still bullish. Then we also have what we call trend lines. I connect this a low here to another low and extrapolate it. You can see I connected there, twice there. This is what we call support trend lines. I'm connecting the lows together, or the support levels. It's supporting the prices. You can see at this point in time here, that was the highest. At that point in time, that was the highest the market was. And then we had this whole NASDAQ bubble burst, and all the IT companies came down. It took market nearly 3 years to break out above the previous high and resume its bullish trend. Okay, so we need a breakout above a previous high to continue up. This is what we call a breakout, and that's what happened recently. Also, this was the 2008 subprime crisis. It took a while, it took nearly 3 years for the market to recover, then we broke up above it. JSE is one of the only markets in the world really to make new highs. We're very close, all the time we're making new highs. So this is the reason I've got the slide up, just to give you perspective. Where is the JSE? Most other markets, the Dow Jones and these guys are just hovering around this level here. Okay, Japan and Asia are not even near that. So it's interesting to know that our market is one of the only markets making new highs. Okay. What I want to do now is just chunk down further from there. So now you look at the top 40, you can see it's also bullish. This is the top 40 large cap stocks, Anglos, Billitons, etc. The next 60 companies is what we call the mid caps. You can see the trend there also, it's bullish. However, that high is slightly lower than that one there. So the market's a bit of a sideways market. Could be that the guys are moving out of this sector into that group of shares. A lot of the top 40 stocks, by the way, are Rand hedge shares. They benefit from a weaker Rand. So I believe that you should have some element of Rand hedge in your portfolio. Anything that's not in the top 100, we call that small caps. So obviously this is under the radar screen of the institutions, the pension funds and unit trust guys, but these are the shares that you see the trend here, they are flying. Then we have another stock market running together with the main board, what we call AltX, Alternative Exchange. It's just bullish. It's just trading above those moving averages. And this is more the smaller, riskier shares that trade on this market. But anyway, when it comes to the simulation, we're going to concentrate on these two markets today. What you're going to do with it now is breaking those two markets further. Where are the opportunities? So yes, we're looking at the top 40, and that top 40, a lot of them are mining stocks. So we're talking about mining and resource stocks. Okay? What is the trend? The trend is bearish. That was a crossover. Just now we spoke about the golden cross. This is what we call the death cross. So when the 50-day moving average, remember this is a daily chart, when the 50-day crosses below the 200-day moving average, it gives us confirmation that the trend is down. That's what we call the death cross. Anything below this is bad news. So your Anglos, your Billetins, and your mining stocks have been hit. You can see you have the gold mining shares. Gold mining shares on in a free fall. Okay, gold price has been falling. The rand is stronger, so that's obviously affecting our mines. That's platinum. So platinum, yes, we've gone above our 50 rand moving average, but we're still way below that. Sorry, let's go back quickly. Below the 200-day moving average. That's why I'm calling it bearish. So where's all the activity been happening? The guys have been focusing on the financial shares, the banking stocks, the listed property companies like Growth Point and Redefine, but also the listed insurance, Old Mutual, Sunlums and that. Okay, and you can see the trend here is even more bullish when it comes to the industrial 25, and this has a lot to do with the industrial Rand edge stocks, your SA breweries, your British American Tobacco, your MTN, and those kind of stocks, your Remgros, your Richmonds. Okay, so that's where all the activity has been happening. Those are the stocks you should be in right now. Okay, so that is one way to help you find shares for your initial watch list, is what we call the top-down approach. I do that every day. It takes me 20 minutes. Then I read the newspaper, why the market's going up. So this is a second way of finding opportunities. You have to do a lot of reading, be it websites, Bloomberg, Reuters, CNN, Money. I also use newspapers and also the websites, Business Day, Business Report, Soccer Build, those kind of things. On a weekly basis, you can look at magazines like Financial Mail, Finances and Technique, FinWeek, and there's a lot of other local websites. But just be careful of subscribing to a lot of information. You'll get what we call analysis paralysis. You get overwhelmed with information, and you don't make a decision. So the idea here is that you want to scan for the shares that you might be interested in, and I just also look for bad news. Why do I say that? Because the share is trading at the bottom of the cycle. Okay, so let's move forward. Let's create a watch list. Once you've got a username and password, you go forward. So we just go to check this off again. There's a little button there called watch list. When you first open it, there will be there's a default watch list. What you need to do is to create a second button, second watch list. Give it a descriptive name. My financial shares or my industrial shares, whatever the case might be. Okay, that's what I suggest. So give it a descriptive name, click on the add button, then your second thing you need to do is to add the shares into the name, into the list. So that's why that list is important. When you print out the share, that list, you need to know what the share codes are. So you add in 3-letter share code, click on add, then you got a watch list. That's what it looks like. So when you first start out, yes, you'll be adding shares, and you know what you're doing. Doesn't matter. This helps you in the sense that you can see movement. These are all down. You can see predominantly red. Means compared to yesterday, the share price is down. Remember, this doesn't give you historical data. It's from day to day. This is showing you where the opportunities are right now. And from this watch list, you're going to choose various shares for your portfolio. And as I say, you can create 3 different watch lists. I suggest call it mining, my restore stocks, and my financials. Okay. So, once you've got a watch list, you're in the starting blocks. That's where it all starts. Now, step number 2 is to gather information. So we talk about fundamental analysis. That's one way of looking at the market. Answers the question, what must I buy? How good will this company be as a generator of future dividends? Okay. And I look at it 3 different ways. I'm looking for shares that are undervalued. I'm looking for shares that are profitable, and I'm looking for shares that are at manageable risk. Okay. And this is very, very simplified quickly. Remember, on our tutorials on the website, goes into more detail. The criteria I use is, I'm using an example here of the PE ratio. The average of the market right now is about 17.7. We're at the top of the range, so we're quite expensive right now. So ideally, you want to find shares that are trading lower than that PE ratio. I'll go into more detail now on the next slide and explain what these things mean. Secondly, when it comes to profitability, I'm looking at return on equity. My benchmark criteria there is 15% plus. And then lastly, when it comes to interest cover, that's what looks at risk management. This helps me look at financial risk. I don't want to buy into a share that's got a good chance of going bankrupt. So this helps me look at its financial risk. Okay, so let's talk about the ratios. What do these things mean? So you want to buy into companies that are profitable. That's what's important. You want to buy companies that are profitable, making money. Okay, now depending on the company's dividend policy, and that's decided by the company's management, they pay part of it out, usually about 1/3 to get paid out in the form of dividends. What's left behind is what they call retained earnings. This is capital that a company uses to expand. Okay, So another word for profit, by the way, is what we call earnings. So let's discuss how these things are worked. You want to compare one share to another share, so we need to break down that millions into per share value. So we're going to calculate what they call earnings per share now. So let's say, for example, this particular company had 66 million rand in profit, and they got 825 million shares in issue. So you divide the 66 million by the 825. In this situation, my earnings per share is 8 cents per share. So I can take Anglos, I can take bulletins, whatever the case might be, break it down to per share value, and then compare that number now to the current share price. Now I can see if it's cheap or expensive. And there's two ways to look at that now. So we look at what they call earnings yield, and we look at PE ratio. So how do we calculate earnings yield? Earnings yield is the earnings per share divided by the current share price. So in our example, okay, and what we're trying to calculate here is what they call earnings yield. You can usually compare it to a savings you get in the bank. Okay, so in our example, our earnings was 8 cents per share, and let's say, for example, the share price right now is trading at 1 rand a share. In the share market, we always talk about cents, so we talk about the share market, the share trading at 100 cents per share. Okay, so 8 divided by the 100 cents, we get an earnings yield of 8%. As I say, you can usually compare that to the return you can get in the banks. Okay, so what would you prefer? 8% return on your money or 5% return on your money? Yes, you want a high earnings yield. Okay, now the inverse of that, if you had to turn it upside down, okay, we call that a price earnings multiple or a price earnings ratio. How many times can we take the current earnings out of the current share price? So if earnings had to stay static, how many times can we take it out of the share price? So in that example, it was 1 rand divided by 8 cents. In this situation, our price earnings multiple is 12.5 times. So what would you prefer? To take 12.5 years to recover your money out the market, or 5 years to recover your money out the market? So when it comes to PE ratio, you want a low PE multiple. So it's just the opposite of the earnings yield. Okay. We go one step further, and we can talk about a dividend ratio, dividend yield. Remember, only part of the profits gets paid out in the form of dividends. This is income from shares. Okay, so our dividends divided by our current share price. So out of that 8 cents in earnings, only 3 cents gets paid out in the form of dividends. So our current share price is 1 rand. In this situation, our dividend yield is 3%. Okay, so you want a high dividend yield. Okay, you'll see some examples just now when I highlight. Ideally, I'm always looking for shares giving you at least 5% dividend yield. Okay, so anything with dividends, by the way, you do pay 15% tax, what they call dividend withholding tax on your profits right now, but you're still getting 85% tax-free. Okay, so that is what we call earnings ratios. It helps to determine if the share is undervalued and profitable. Obviously, there are more advanced ratios, we call PEG ratios and price NAV. Those are just tools also to help you make a more informed decision. Because of time constraints, I'm just going through this very quickly today, just to understand the process. So when we talk about profitability, you know, we're talking about return on equity. As an equity shareholder, I want to know, is my money working for me? So in this situation, 2 ways to calculate it. My profits owed to shareholders divided by my number of shares in issue. In this situation, 66 million divided by 276 million shares in issue. This will give me a return of 23.9%. And compare it to a bank again. What would you prefer? 10% returns on your money or 23.9%? So yes, the higher the better. But the point is, you're looking for sustainability. Can this company sustain this kind of growth over time? I prefer to look at a company growing at least 15% plus. So yes, does it meet my criteria? Yes, it does. Another way of calculating is what we call headline earnings per share divided by opening NAV. But basically, you get the very much the same kind of ratio. Does it meet my criteria 15%? Yes. Okay, so when the second box, is it profitable? I tick it. And then lastly, I'm looking for companies that are a manageable risk. If the company's got any borrowings, it's gone to the bank and borrowed money to expand its business, honestly, can the company manage that debt? So it's one of the most important ratios when it comes to financial risk. Okay, so how's it calculated? Yeah, we're talking about profits before tax divided by our interest bill. Now, in this situation, we've got 115 million rand in profit, and our interest bill, remember the interest has to be paid back to the banks. In this situation, is 20 million. How many times can we take the interest bill out of our earnings? In this situation, 5.7 times. Does it meet our criteria? Yes. Remember, our criteria is at least 3 times. Less than that, don't waste your time looking at this share, because you're looking at a company that's very risky. You don't want to buy into companies that are risky. Remember, you go from cash into shares. You don't buy into companies that have a good chance of going bankrupt. So this is just criteria to help you go through the gravel as such. Okay. So just to simplify the process for you also, on our website we have a tool under the research button called search. You can go click a default. In this situation, I've clicked this little button here called what I call a shortcut, undervalued profitable shares. So just now I spoke about the PE ratio. There we go. Okay. So this is highlighting shares that are cheap. So we go one step further. We also look at the growth. This company is growing its earnings by a certain amount. So that number divided by that number gives us what we call the PEG ratio, which is a much better way of looking at shares. So ideally you want to find shares that are undervalued if I'm looking at that scenario there. So this PEG ratio highlights all the shares that are undervalued. So this is a third way of finding shares for your watch list. Okay. So you can see based on, okay, hope you guys are not having technical problems. Look like these problems coming up again. Jeez, don't know why. No technical problems on this side. Okay. Just my system popped up and says there might be some technical problems. Okay, gee, fun and games, yeah. Guys, I hope you're enjoying this, and as I say, you guys will be getting this presentation anyway. Let's move forward. So going back to our watch list. Okay, you got this initial watch list. Remember, you go click on the button here, watch list. There's your initial watch list. What's important now, you want to find out more about the shares in your portfolio. So you can click on the share code. This will take you through to what we call the share info page. Now, in that share info page, there's a thing called company analysis. So there's a one-pager written by a company that works with us called Independent Fundamental Research. This is a company called Hold Sport. Now, most of you have never heard of Hold Sport, but then some of you might have heard of Sportsman Warehouse or Outdoor Warehouse. Okay, now it makes a bit more sense. Okay, so this is a 1 or 2 pager. What I want to highlight for you, they're doing a little ratios here for you. This is a little table I want to highlight for you. So based on our criteria just now, I said you want to find shares that are undervalued and profitable, no financial risk. Remember, historical PE in this company, 10.6. Does it meet our criteria? Yes. PEG ratio, it's just over that valuation, but no problem. And you can see it's paying a nice little dividend of 4.5%. I said anything ideally over 3%, close to 5, that's good. You can see everything's green here. This is the kind of company you like to go for. Okay. You can also see our recommendation, buy long term. So again, now you go through this process now, go click on the share code, and then you start sifting through the watch list and making it just a bit smaller and more manageable. Okay, so this is the process by just using the fundamental analysis. Okay, so going back to our website now, what I suggest also, once you've gone through this selection process and fine-tuning your shares, you'd also see that your watch list or highlight activity. If the share is green, it means the share price is going up. There's demand, more buyers than sellers. If the share price has gone down, if it's red, there's more sellers than buyers. But obviously this is intraday. Okay, so what's important more is to look at the longer term picture. But also when it comes to the watch list, as I said, this is the starting blocks. Let's put you in the starting blocks to help you choose your initial shares. There's a very nice little tool here called Viewers Investor. Once you've got a watch list, remember, by the way, you can only put on 30 shares in this watch list. So the idea is to make it smaller and more manageable. You don't have to have 30, you can have smaller than that. But once I've clicked on this little button here, Viewers Investor, goes over to the situation where I can start ranking. I can click on each individual column, and I can start ranking the columns based on 12 different financial criteria, fundamental criteria. So yeah, I've clicked on this little column here, PEG ratio. You see half of my shares are yellow and half of my shares are green. So I've got a bit of a blend of my portfolio in this list here. Some of them are what I call growth stocks. They're growing very fast based on the earnings, and some of them are value stocks. This is based on the PEG ratio and the PE ratio. Okay, so nice little blend. But the idea is that from this watch list, I'll be choosing some more shares for my watch list and things like that, and I tweak it and tweak it. So you're not buying into shares that are overvalued, okay, or that they've gone so far, they've done the opposite, they've become so undervalued they actually become speculative. In other words, there's risk involved. Okay, But the point I'm trying to make is use the tools available for you guys. Big time saver. This puts you in the starting blocks to help you focus on the best opportunities. And this is how you make money. Find the shares that are the potential winners. Don't go buy the shares that are now 1 cent. They were 5 rand and now 1 cent. In the hope that going from 1 cent to 2 cents, you're going to double your money. You have to buy millions and millions of shares, and there's millions of shares ahead of you. Those are the dogs. Avoid those companies. This is a tool that helps you focus on the potential winners. Okay, this is how you make money on the market. Okay, so that's what we call fundamental analysis. I've gone through it very quickly. I'm scared we run out of time, so obviously I can handle more questions and things like that. Okay. So I'm just thinking if there's any. I thought there was a call coming through that's regarding this setup. Okay, let's talk about step number 3. Okay, gathering technical information. This is start looking at the other side of the coin. When we spoke about fundamental analysis, what must I buy? The other 2 questions you need to ask is when must I buy and when must I sell? That's what we call technical analysis. The timing is your critical success factor. So when it comes to my checklist here, there's 3 things I'm looking at. First of all, I want to find out, is the market moving up? Is it trending up? Is it trend bullish? So I can look at 2 things here. This is obviously in this presentation, very simplified. I'm looking at cycle analysis. We touched on it just now. And I can look at moving averages. Okay, we highlighted it for you just now. Within that long-term uptrend, the market is still going up and down. So you want to buy in the bottom, in the dips, or what we call oversold territory, or you want to sell at the top of the market when it's overbought. More buyers pushing the price up, that's where you want to get out. When everyone else is selling, you want to be buying at the bottom of the cycle. And there's various technical indicators. These are just mathematical formula that creates tools to help you in your timing decisions. So I'm going to discuss today MACD. There are lots. Okay, with our software, our web professional, there are more than 100 technical indicators that help you in your timing decisions. Remember, when it comes to technical analysis, there's 2 things we're looking at: price and volume. With fundamentals, there are a lot of things involved. With technicals, there's only 2 things we're looking at: price, what's happening with price, demand pushing the price up, oversupply pushing the price down, but also people's commitment to price. So here we look at what they call volume, the number of shares traded. So I can look at what they call unbalanced volume price trend, and that kind of stuff. And also I'm looking at for shares outperforming the market. I'm looking for shares that are potential winners. And this is why I use Veritas strength analysis. So this is to keep it very simple. On the next slide here, this is Sassel. This is about a day or so ago. This is one of my favorite graphs to look at in the sense that everything is in one slide. Okay, so we spoke about it just now, about the moving averages, but let's talk about cycle analysis. Definition of a bull market: higher highs, higher lows. Okay, so you can see here, this high is higher than that one. That high is higher than that one. That high is higher than that one. This low is higher than that one and higher than that one. That's what we call a bull market. So the trend is bullish. Okay, so there's my moving averages also. There's a crossover there. Okay, and it stays above it. So your moving averages also provide a bit of support. So they haven't crossed. I need my 50-day moving average to cross below the 200-day moving average to confirm a change in trend. So right now, I'm just calling Sassel bullish. Remember, I'm looking at my fundamentals, and I've looked at the technicals now to help me make a timing decision. Is it time to buy? No, not yet. How do I know? Because it's the top of the market. Okay, I want it to come down. Okay, I want to buy in the dips like we have over here. Okay, so how do we know that? We use an indicator called MACD. It stands for moving average, convergence, divergence. So it's an oscillator. It moves above and below a 0 line. Okay, ideal situation would be when it goes into oversold territory, when it comes below this little 0 line and moves up. That would have been a good time to buy over here. Okay, so way back here. So we need this to come back again and go down and then come up again. So this will be a hold. Okay, if I'm owning the share, alternatively, if I don't own the share right now, it would be a watch. Okay, so this helps me determine price action. On the other side of the coin, volume price trend is a running total of volume. And I'm looking at the trend. That trend is up, which is confirming that trend over there. The trend is bullish. Okay, so volume accumulation confirms price action. You also remember this is big institutional stocks. The oil price has been hovering around about $107. but also they anticipate good results from the company soon. Then in a trading period where I think it's about 20 to 25% growth in earnings, a lot to do with the rand. So people want to take advantage of that, and that's why we've had this little run recently. Okay, bottom graph shows us the Sasol share price, one data stream divided by another data stream. So I'm comparing Sasol share price compared to the index, to all the other shares in the market, to the JC All Share. What's important here also is the trend is up. I'm going with shares that are outperforming the market. So our ideal situation would be to have bought the share way back in our last little dip. Okay, so I'm showing you this just to show you hindsight. Hindsight's a perfect science. This is all the kind of thing you're looking for. When all these things come together next time, I want to look for this. Okay, so that would have been an ideal time to have bought into the share way back here in April, May. Okay, you would have bought roughly in about 375 Rand, 378, 380, with the share price trading nearly 100 Rand higher. So if you had 100 shares, it would have been an extra 10,000 Rand right now. Okay, not too shabby a few months later. Okay, so that's the kind of thing, this is how you make money in the market. Okay, so guys, that was step number 3, gathering technical information. I suggest going to our tutorials, goes into more detail, all these things work together. Obviously, because of time constraints today, we're going through it very quickly to understand the process. So step number 4 now is going through the process. Once I've looked at my watch list, I've looked at fundamentals, I've looked at technicals, I want to, on paper now, look at building a portfolio. So step number 4 is to create a balanced portfolio. When I say balanced portfolio, there's 3, I look at the 3 S's. I look at structure. What kind of shares do I have in my portfolio? So I'm looking at large caps and I'm looking at mid caps. Okay, secondly, I'm looking at how many shares I have. So in this situation, I have roughly about 12 shares in my portfolio. So you don't have too little shares or your eggs in one basket, then it's risky. You don't have too many shares, you have to spend time analyzing it. So this is how I structured one of my portfolios quite a few years ago. I allocated at least 50% of my portfolio to large caps, so roughly about 25,000 Rand to each of these, 12,500 Rand to each one of these shares. What's important also is to diversify or spread your risk. You don't have all your shares in mining or your shares in gold. So what I did, I spread it between 3 and 5 different sectors. I like to break it down by industry. So you can see I've got, this is a resource stock. This was my Sasol share. This was my Standard Bank. This is financial. This was MTN a few years ago. And this was Tiger Brands. This is another industrial company. So I'm allocating most of my funds to these 4 pillars. Okay, you don't have to do exactly the same thing, but that was the thinking behind it. Then I allocated 40% of my funds to mid caps. So I'm allocating less funds to more risky companies, we're going to call it that. So I'm allocating roughly about 5,000 Rand to each one of these companies. So there's a financial share, there's a mining share, and so it goes on. But what's important also, I personally like to always have at least 10% of my money in cash. Obviously, if you're buying into companies that are paying out dividends, those companies, that dividends will be going to your cash balance also. Why do I like to have some cash available? If I'm fully invested, and if an opportunity comes along, then I'm forced to sell a share for the wrong reason. If I've got cash available with some dividends, I can always take advantage of it. So what's important here is do this on paper. This is the kind of shares I'm looking for, and then from there, from my watch list and through my selection process, this is how I start building a portfolio. Remember, as I say, it's a balanced portfolio. You want to have some financial shares, you want some industrial shares, you want some resource stocks. Okay? So if the rand gets stronger, your financial shares benefit. If the rand gets weaker, your resource stocks benefit. Okay, so it's a balanced portfolio. So I hope you guys understand that process. And then obviously the other little S, we talk about the 3 S's, the structure, the spread, and then a stop loss. It's important also, some people like to use a stop loss, especially from a trading point of view, very, very important. If the share price drops 10%, get out. Okay, so you want to minimize your losses to 10%. So let's talk about how to start trading. Once you've registered for a free trial account, all of you will have a simulated account. Okay, so you select the account on the top left-hand corner here. You go click on the portfolio button. You all start off with 100,000 Rand. This is fictitious play money, Mickey Mouse. Okay, it's not real money, virtual money. People find me and say, gee, I've got 100,000 Rand in my account, how do I withdraw? Okay, Okay, remember it's virtual money. So if you want to withdraw this money, please give me your Mickey Mouse bank account details and I'll transfer it. Okay. This simulator, by the way, you have an opportunity to reset it. So if you make a mistake, reset it. But try not to do that. If this was real money, what would you do? Obviously, take the knock on the chin, learn from it, move on. Okay. So you start with 100,000 Rand. Once you want to start trading now, what happens? Step number one, you click on new order. By the time you've come to this stage now, you know what shares you want to buy. So I click on new order. You need to enter the share code. In this situation, I'm looking at AVI. This is a food company, Anglo Vol Industries. Okay. You enter, you select what side. Remember, this is play money, so it's risk-free. So you're gaining the practical experience how to place a trade. Okay. Also, more importantly, is for you to gain confidence in your stock picking abilities. So on paper, let's say, for example, I want to allocate roughly about 10,000 Rand to each share with costs. Remember, this is real shares under real trading conditions, risk-free, with costs. So in this situation, I'm buying roughly about 300 shares at 30 Rand a share. Okay, so I enter the price and I click on submit. Okay, like in the real market, we need a willing buyer and a willing seller. So go to the market and say simulated order. So I need a willing seller. Remember, I'm buying, so I need a willing seller to get me at that price. Okay, so it's alive there for a second. And ideal situation, you want to place these orders within trading hours, between 9 o'clock and 5 o'clock in the afternoon. That's when the market's trading. If you do this after hours, you might not get this trade in. Okay, remember it's a simulated environment, so it's risk-free, it's play money. Remember also, it's 15-minute delayed. Okay, so let's say, for example, I've got a willing seller. Voila, I've got my shares. It goes into my portfolio. You click on portfolio. Here I've got my shares, my AVIs. I bought 300 shares. There's my average cost. My cost is much higher now because of brokerage. My shares have to move up 134 Rand or 1.46% to break even on costs. That's why it's important. Roughly about say 8,000 plus makes it worthwhile. Don't want to go buy one share. Our minimum brokerage is 98 Rand per share. So I'm teaching you how to use the platform, but also understand how this thing works. We give you feedback regarding your simulator. Okay, so the idea is we're looking at risk management. Are you applying the structure, the spread? Are you applying a stop loss? And this is how you start learning about trading on the market. So anyway, guys, that was a quick summary. Obviously, the stop loss also very important. So whenever we actually have a stop loss on the simulator, we have what we call a price watch. So it actually forces you to watch the market. Once you've bought the share, very important, come back to new order. Remember, I'm looking at Anglo Vol. Okay, I go click this little button here called price watch. Okay, if the price drops by 10%, so I want to use this trading percentage. If it drops by 10%, alert me. It's going to send you an SMS and an email. Okay, so it's a good way to condition yourself to watch the market. Okay, if it drops, you're going to get an SMS, email. What you need to do then, obviously, sell your shares. Okay, so guys, I hope that's helped you a bit. Yeah, you can see how it would happen. There's your SMS and your email. And okay, so if the price drops, that's where we bought it, 336, 10% of that is 304. If it drops to 27.32, you get an SMS. So that's the thinking behind it. Okay. So guys, quick summary before we run into questions. Just understand there's a four-step process. I've been doing this for more than 20 years. You can fine-tune it. Start with this and then obviously add on your own criteria. Remember, 4 steps, narrow down the choice, gather information, ideal situation, looking for shares that are undervalued, profitable, no or manageable risk. When it comes to technical analysis, ideally I want to find shares that are on a bullish trend, within a dip, and still outperforming the market. Okay, and then when it comes to the 3 S's, okay, my structure, my spread, and my stop loss. This, if you apply this, I can tell you now, you guys will make money. Okay, so I've got lots of clients have been doing this with PSG. Very simplified process. Obviously, you can add it on, add your own criteria on later. They become more detailed, and just fine-tune your decision-making process. But just to quickly summarize, I hope you guys learned how to make money. It's a process. You know, it's having an investment plan or a trading plan. Have it documented. So those of you that haven't got a trading account with us as yet, maybe open up a free trial account. It's a 30-day free trial. Won't cost you anything. You have access to our online training course, those research tools I was talking about, more specifically the trading simulator. Okay, so from my side, good luck and happy trading. So hope you guys have enjoyed it. Here's my contact details. That's my email, and that's my, the landline as such. Okay. But send your email, your questions through to Jean-Luc, and obviously the presentation will be sent to you guys also, and the recording. And hopefully that will maybe stimulate more questions for you guys. So let's see if we can get any questions. International trading, minimum amount to be invested. Okay, good question. International. Okay, remember that we've been talking about a simulator. This is obviously just a JSE. We're talking about international. You're talking about at least 50,000 Rand. So it's not for everybody. 50,000 Rand plus or 5,000 pounds. So less than that is not economically viable. I know some of you guys want to go buy one Facebook share, whatever the case might be. This is for offshore trading, offshore investing is more for the advanced investor that wants to invest or spread his risk geographically. So yeah, you need much more money, 50,000 Rand or 5,000 pounds. There's two ways to do it, by the way. So you can go either asset swap, or you can have an offshore account, provided your account is in all fixed up. Okay, lots of questions coming through here, guys. Just hang on. Just want to quickly change my monitor, oops. Can't hear anything yet. That's the old one. Just a beep. No voices yet. No audio. Keeps beep. Okay, it was obviously before we started. Can hear you now. The slide presentation not working. Okay, I'm just going through the questions. Okay, working. What problems? Technical problems on this side. Okay, I'm definitely enjoying it. Fully engaged. Excellent. Thanks, Jean-Luc. It's the same as online platform. Call, I'm 90% sure. Is this the same as the online platform? Not 100% sure what you mean by that. Could you elaborate on the companies that are Rand hedges and why they are good buy now? Okay. Obviously, Rand hedges is companies that benefit from a weaker Rand. So a weaker Rand is anything close to 10 Rand compared to, for example, 8 Rand. So if I've got operations offshore, I'm earning dollars, I convert those dollars back into Rand, I'll have much bigger profits. Okay. So that's if you have a operations offshore. That's if I'm an exporter, that kind of stuff, I want a weaker Rand. If I'm an importer, I want a stronger Rand, because obviously I want to spend less Rands to convert it over to dollars to make it more profitable for me. But Rand hedges, the reason why they've been running is obviously because of the profits offshore. Breweries, British American Tobacco, these guys have been doing very, very well offshore. Not so much the Rand, but obviously the additional benefit is because of the weaker Rand, the profits will be even bigger. Okay, so that answers your question about the why Rand hedge. Here's a question from Johan. Sorry, I missed it. What is the point of reference for MACD? Point of reference? Not 100% sure what you mean by that. Point of reference. Remember, MACD is an oscillator. It's two moving averages, a 26-day moving average, minus a 12-day moving average creates a third moving average, and I put a fourth one on top of it. So don't worry about so much the technicals. What's important is the oscillator moves above and below a zero line. When it moves up through the zero line, that will be a buy signal. When it comes down through the zero line, it will be a sell signal. So this is a tool to help you get your timing right. Any other questions? Is it regulated? Yes. When we say international markets, remember we're trading in the top 25 international markets, the New York Stock Exchange, the London Stock Exchange, the Australian Stock Exchange. All these markets are highly, highly regulated. So yes. So yeah, and also very, very finicky. So yeah, so you don't have to worry. That gives you that peace of mind. You are dealing with regulated. Yes, the platform I showed you guys just now is the one you'll be trading with on the simulator. That's it. But the actual trading platform looks exactly like that. So that's the idea why I use a simulator. Okay. Guys, I don't know if you guys have got any questions. Any other questions? You guys can hear me. What will actually? Thank you very much. Pleasure, Cole. Guys, I hope you found this was beneficial. We'll do this more. Please give Jean-Luc all the feedback, what we can do to change this. We are planning to come down there in the new year. We'll do a whole weekend of this, my boot camp. So I hope you guys enjoyed the very first time. It was beneficial. I enjoyed it. So thanks a lot for the opportunity once again. As I say, this is being recorded. I will be sending this presentation down to you guys. So we'll take it from there again. Guys, thanks a lot for your time. All the best. Cheers.